Hey, Bulls and Bears, what is happening? It is Thursday, November 3rd, 2022, and the economic decline, it appears to me like it's beginning to accelerate. Now, what is the big uh, crumbling in the economy? What's going to be more noticeable in the economy going forward for the last couple months of the year here? I think it's going to be accelerating layoffs. And right now, we're still seeing this unemployment number, which is fake, but we're still seeing it close to 50-year lows. We know that in reality, there's 100 plus million people out of the labor force, so we know that number's pretty much irrelevant, but it is a number that people look at on the mainstream. And we still see a lot of job openings. A lot of them in lower paying jobs are not going to keep up with the cost of living for the most part. And I think that's why they're having trouble recruiting people, one of the big reasons. But let's take a look at some of the more recent numbers here on layoffs. And some pretty big names are out there talking about hiring freezes and laying people off. Let's take a look here at some articles. Out of the journal here, once again, Amazon. We know that Amazon has sent a lot of signals of a deteriorating economy. And now the latest is going to be hiring freeze on their corporate workforce. Now we know prior to this, they've been canceling leases on warehouses and stopping construction on corporate towers. And considering the big push and the big surge into e-commerce, especially Amazon, with the growth in the last couple of years, especially after so many brick and mortar and small businesses were closed down in 2020, many of them never to return, never to open back up again. Amazon's a great gauge on what's happening with the economy, because that's a big part of the consumer spending now is online. And of course, Amazon is the leader for e-commerce. So here's another peg on the board as to evidence here that we are entering a very serious economic, I think it's going to be a restructuring. And I think once we're through with this next, what people are calling a recession / depression, I think things are going to be a lot different on the other side for the better. But until we get to that point, we're going to have to go through a lot of pain. And we know that the central planners, the bankers, the central bankers, they want more control of how people spend money. They want more control over people. So it's going to get a lot different here. But let's talk about more of these layoffs. Here's another one. Lyft to cut 13% of its workforce in the second round of layoffs. And this is just going to continue. People are maxed out on debt for the most part. I mean, record levels of debt. Not everyone's in debt, but the people that are in debt, most of them are in the most debt they've ever been in. Savings for consumers has plunged to financial crisis levels. We have this cost of living that's not being fixed. People think because the housing market's coming down that that's going to be a little bit better. But when you look at the cost to finance a home, the cost to carry that home and that mortgage is even higher than what it was, even when home prices were more elevated than they are now. So home prices coming down, but people that don't have cash to pay for a home are still going to pay more because of the higher mortgage rates. You see how this is working out here? So this is going to be even more difficult, even as prices come down in a couple of areas, autos, homes, but the cost of finance is still going to make them much more difficult. So it's going to get very interesting, but let's take a look at some more layoff news. This is just the tip of the iceberg here. Right, and here's just a recap of some of the news that came out at the end of October, just about a week ago, or less than a week ago. Tech's biggest companies are sending worrying signals about the economy. This is all out of the Times. Alphabet's profit drops 27% from a year earlier. That's this platform that you're watching right now. Alphabet owns YouTube. It's Google. Microsoft reports slowest revenue growth in 5 years. But yet the economy is as strong as HELL is what we're being told. Look at the unemployment number, how low it is. What an amazing economy. All right, now quick story. I was talking to a client the other day, and the topic had shifted from their own personal finance, which is my job, but the conversation shifted into more of a macro general discussion about the economy. And this guy was saying, well, the economy is still really good. And we started talking about some general topics, and this person was loaded up with debt, student loan debt, mortgage, 2 car loans, credit card debt. I mean, every type of debt you can think of almost. But yet they still had this overall impression that the economy was good. And I started getting into how the economy is gauged and what's looked at as being good on the economy. And I said, well, yeah, people spending money over the past decade, this record level of debt that people have accumulated, including himself. He was in a lot of debt, and I didn't say it like that, but that is what made the economy look so good. And I think a lot of people are like that. They just assume that the economy is strong because they see profits, which are starting to decline now. Just over the past year, we're seeing some big companies, announce these drops in profits and slowing growth. And things have taken a long time to kind of play out and get to this point, especially when you see the lending side of things. Right, but this person was under the impression that the economy was still strong, even though they were loaded up with debt. And I kind of had to frame it like I frame it here on a lot of these videos. I'm like, of course the economy seems strong because people have spent so much money. It made the economy look good. It created the appearance of a strong economy. But as spending slows down, as people realize how much debt they're in, and they're going to be forced to pull back on this recreational spending and entertainment spending, you're going to see job losses go right along with it. So it's no coincidence, it's no surprise that we're starting to see now announcements out of big companies of hiring freezes and layoffs. But let's talk about something else here, still on the same topic here. Look at this article right here. This is the key. This is out of the Telegraph. World plunging towards societal collapse as era of cheap money ends. And this is the Fed, and this is the thing with the Fed. The Fed came out and they said, we're going to slow down the economy. It's going to cause some jobs to be lost. They acknowledged that. I think they were trying to prepare people because of obvious reasons. When easy money is no longer as easy, a lot of the jobs that were created are going to go away with it, right? Pretty simple. But the Fed even came out there and they said, prepare to lose your job. There's going to be some job losses. There's going to be some pain out there. But societal collapse, this is out of the Telegraph. This is pretty dire prediction. People said I was doom and gloom. I haven't used the word societal collapse in any of my videos until now, of course. But this is what is going on. It's going to be in slow motion, which is a good thing because hopefully it'll give us more time to prepare. But here is the situation that I want to address now. And that goes back to the basics of this channel. The name of this channel, Bull, Boom, Bear, Bust, boom and bust cycles. This is what is done to help wealth transfer from the working class up to the top 10 and even 20%. So boom and bust cycles. The Fed creates the boom, they create the bubbles, then they come in with higher interest rates. They always overdo it. And with everything being so leveraged, it doesn't take that high of rates to bring on these corrections. And with the cost of living still being elevated, these debt levels are really going to come back to bite a lot of people that are carrying debt. If you're not paying off your credit card in full each month, if you're carrying a lot of debt, credit cards are taking another, interest rates on credit cards are taking another big jump. And it's going to get a lot more painful before it gets better. So keep stacking, folks. Hope you're out of debt. Hope you are stacking cash, preparing for that deflation. But at the same time, I hope you are prepared for some nightmarish scenarios that may unfold here in the next 3 to 6 months is kind of my time frame. We have this diesel shortage, which is very serious, which could bring societal collapse, just like that article out of the London Telegraph there. Things are going to get serious. It may not look like it now with just a few layoffs here and there and debt levels elevated, things that are serious, but just most people not realizing yet. But I think most of us here are going to be okay. Hope everyone's well. Thanks for watching this report, everybody. What do you think about the layoffs? Another signal, another sign from Amazon that things are not looking so good. All these other layoffs, the tech sector and beyond. Please let me know what you think down in comments. Thanks for supporting this channel. Thanks for being here, everybody. Big love. Bye for now and peace. Okay.